Hello traders, Gary Wagner here. Approximately 12 noon in Honolulu, Wednesday the 23rd day of November. And this is the daily report for gold and silver on the day before Thanksgiving. We do have so much to be thankful for, but one thing is not higher prices in the precious metals markets today. We do have both the metals down today, gold and silver, along with platinum and palladium, with silver leading the way down about 3%, currently trading, as you can see, 31.68, 31.70 in that area. That's putting it down, as I said, about $1, which is over 3% on the day. Gold breaking back below 1,700, trading off anywhere between $4 and $6 lower, off about 0.35 on the day. Interesting day we are having in the market. We have our S&Ps. Those are trading lower today, drastically lower. We have dollar index higher. And the question is, where will all this end? Because the fundamental reasons behind these most recent sell-offs, in the way they're being cited from the fundamental forecasters, is a flight to quality and a flight to the dollar. It makes me glad that I am a technician, because being a technician, we get a little bit more clarity within the marketplace itself. This morning, I want to start with silver. And really what I want to look at in the silver market, as you can see, it is back to this support area that we've been looking at. But quite honestly, we don't have any reason to believe that it's going to hold this area. As you can see, it has broken through our first line. That's 31.90 right in here. Market trading 31.69. The next real level is going to be 31.51, and it's not all that far away. So where, in fact, could this market go? Well, my personal belief at this point is, aside from a game-changing, something fundamental in the market that changes everything, my next target area within the precious metals and within silver is going to be right around $30 per ounce. That's the real level that it has in terms of the next really strong level of support. When we look at this market from the initial rally that we got at the beginning of this year, that was when it was trading right around $26. It doubled in price, going up to about $50. And then when we look at the retracement, you can see it has at this point given up. This would be 76%, which is 31.51. And that is the point in which we have just gotten to. Granted, we are trading a little bit above it, but not too much above it at all. You know, the next market that we want to look at, daily chart, this, of course, is our cash gold market. And, you know, we have been through a whole lot this year. As we get close to Thanksgiving, when we consider this is last year, and this was the record tops that we had, up around 1,400. We then got our A, B, C correction, and we began a rally right around 1,300 that would take us up, propel us all the way up to a record top at around 1982. When we take a look at the way that the count transpired itself, I believe we had we had our third wave here. We had a long fourth corrective wave, and then we had wave 5. This would have given us our small A, our B, and our C, which was all in terms of a big A. Then we had a major B here, and now we are looking at the conclusion of this particular correction and trying to determine where, in fact, this correction might take us to. That is obviously going to be the tricky part, because as we've talked about, there really is three basic tenets or three basic types of corrections that we can look at. The first one is where the market will come down. Here's the conclusion of our large A. We go up conclusion of our major B. And when you look at that, you can see I've kind of dissected our B wave, but we've got an intermediate A, B, and then C. This C is composed of a 1, 2, and 3. As we come down, to me, it's going to be most likely that we'll get a 3 count on this. And I am a gold bull, so realize, traders, when I talk about where I believe this market could go, it is filled with bias. And the bias that it's filled with is the underlying belief, the underlying fact that I believe that currencies eventually will become devalued because, one, it is based on a fiat system, and two, because we are pumping money into it. We're printing more money. This quantitative easing in the United States, and the fact that we have issues over in the European Union and the United States tells me that in terms of the Western world itself, the currency itself can stabilize against a benchmark, but they certainly can't exceed the benchmark. In other words, I don't see them going that much higher, meaning the currencies. Now, that being said, we have had this flight to quality, and this flight to quality that we have been witnessing has been, without a doubt, into the dollar. The U.S. economy is strong. The dollar has been gaining strength. My personal feeling is I would not be surprised if the euro dollar and the U.S. dollar go back to par. That's correct. You heard me correctly. I believe that eventually the U.S. dollar and the euro dollar will go back to par. And that's quite a ways away. That's a 25% devaluation on the euro. But I believe that things will get worse before they get better in the Eurozone. Now, that being said, where do we think we might see gold bottom out at? Because my sentiment is this. Once we do get a conclusion of this C wave, wherever that's going to be, we are going to go into one of the most dynamic impulse phases that we have ever seen in gold. I think that impulse phase will take gold over 1900, will propel us to 2000 and above next year. That being said, again, where do we think it's going to go? Well, we have to look at a couple of major areas. Now, first of all, it is and has the ability right now, 1681 seems to be a support level that it has challenged and been able to close above on the last couple of trading days. We're looking at a daily chart right in here. At the same time, we have tested these areas, and just like a scouting party on the upside, what it tells me is that when the markets trade below 1700, and right now they are, buyers do enter into the market and prop it back up. However, right now we don't see it because we are witnessing a market below 1700, 1691. If it cannot hold 1681, 1663 is our next level. And of course, this particular bottom, the bottom of this dip here, which is at 1607, those are the various targets that we could look at in terms of where the market might find support and conclude this corrective wave. Once again, we'll have to see. But what's going to be critical? Can it close above 1700? That's not going to happen now. We're going into the Thanksgiving holiday here on the mainland, so I expect fairly quiet trading. But once again, we will have to see. We have some major issues right now developing over in Egypt. They are rioting in the streets. We have concern with the European Union and their debt structure. The sovereign nations are not showing any concrete plan to be able to get out of it. My sentiment is there will be a point in which this bottoms. When it bottoms, I am going to look to accumulate and accumulate aggressively in the gold market. I want to wish all of my subscribers a very, very happy Thanksgiving. Whether you're in the mainland or not, we all have so very, very, very much to be thankful for. This has been Gary Wagner, wishing you as always good trading. We'll talk to you after Thanksgiving. We will be off tomorrow. Have a great holiday weekend here in the mainland. And again, to all my subscribers, we all have a lot to be thankful for. Bye-bye.